Welcome to The Explainer. Today, we're diving into what it really takes for an investment strategy to survive in the wild. And we're using one of the most chaotic periods in modern market history as our case study.
So, let's be honest. When the markets are going haywire, how do you actually stick to your plan? We're about to unpack a story that follows one investment philosophy through years of unbelievable volatility. This isn't just theory. This is about what happens when a plan gets punched in the face by reality.
All right, first up, we need to set the scene. To really get this journey, you have to understand the world these investors were playing in, the small cap challenge. And there's a really great analogy for it.
I just love this way of thinking about it from the SmallCap Informer newsletter. Picture the market as two different neighborhoods. You've got Bulltown, where everything feels optimistic, maybe a little overvalued. And then you've got Bearsville, where stocks are cheap, but fear is absolutely everywhere. And for the last few years, it felt like a lot of us were stuck living in Bearsville.
And this wasn't just a vibe. The numbers totally backed it up. Just look at this snapshot from mid-2025. Small cap stocks were getting hammered, lagging not just the big US companies, but even international ones. It was no doubt a really tough time to be a small cap investor.
So with a backdrop like that, what do you even do? Well, the newsletter we're following, the SmallCap Informer, has a really clear philosophy. And the key thing is, they are not trying to time the market. They see themselves as business pickers, not stock pickers. They care about the company's health, not the little blips on a screen.
And they've got a name for this whole approach: QGARP. It sounds a little technical, but all it means is quality, growth at a reasonable price. Basically, they're trying to get the best of both worlds, the safety of value investing with the upside of growth. And let me tell you, this whole idea was about to face the ultimate test.
Which brings us right to our next section, the trial by fire of 2020. I mean, think about it. Our story kicks off at the absolute peak of a market boom in 2019, right before the floor just completely fell out.
So 2019 started off with a roar. Small companies were having one of their best starts ever. But by March, you could start to feel that uncertainty creeping in. And it was all just setting the stage for the massive, pandemic-driven crash that was coming.
So then right in the thick of that chaos, when everyone is panicking, the newsletter's editor does something pretty gutsy. He basically says, you know what? Let's go check the numbers. Is this philosophy of ours actually holding up?
And get this, the result was pretty stunning. During one of the most volatile periods anyone can remember, their picks were actually up 8.1%. I mean, let that sink in for a second. The rest of the market, big and small companies, was still deep in the red. This was the first real sign that focusing on quality was working.
And their message to their subscribers was just so consistent. They said, look, this recession is weird, it's different, we get it. But the strategy, that doesn't change. The message was simple and powerful. Stay the course.
But of course, the turmoil didn't stop there, not even close. Which leads to our next chapter, surviving in Bearsville from 2021 to 2022. This time we've got a whole new batch of problems. Soaring inflation, constant recession fears, the whole shebang.
This was the period they officially named Bearsville, that neighborhood we talked about, where stocks are cheap just because everyone is terrified. And, they point out that historically, a trip to Bearsville only lasts about a year, maybe 19 months. But when you're in it, man, it feels like an eternity.
And wow, this just shows you how brutal it was, especially for the little guys. By late 2022, a staggering 42% of the companies in the small cap index were losing money. 42%! Compare that to just 6% for the big S&P 500 companies. It just goes to show you that smaller companies really feel the squeeze. And yet, even with all that pressure, the QGARP strategy didn't flinch. It stayed focused on business picking, finding these tough, resilient companies, the ones with solid fundamentals that could actually weather the storm, no matter how scary the headlines got. Okay, so the strategy survived a crash. It survived an inflation crisis. What was the next test? Well, from 2023 to 2025, the challenge wasn't just fear anymore. This time, it was the powerful temptation of fads and distractions. So when the AI craze just exploded, the temptation for everybody was to chase the hype. But the advice here was so consistent, so smart. They said, don't chase the flashy trend. Instead, find the quality businesses that supply the trend. It's that classic sell shovels during a gold rush strategy. Find the stable companies powering everything from behind the scenes.
And this really gets to the heart of their entire philosophy. It's so easy to react and try to time the market, but the biggest risk you face is missing the recovery.
The market's best days almost always happen right after its worst days, and if you're sitting on the sidelines for those, it can absolutely crush your long-term performance.
Okay, which brings us to the grand finale, the long-term payoff. After navigating all those years of booms, busts, fads, and fears, did sticking to the plan actually work?
This is the question, right? This is what it all comes down to. After that whole grueling journey through Bearsville and all the discipline it took to ignore the hype, did it actually pay off in the end?
Well, the data really speaks for itself here. Over the entire life of the newsletter, the performance of its stock picks didn't just beat the small cap benchmark, it completely crushed it. The results is just undeniable. A disciplined, business-focused approach delivered some serious outperformance.
That whole journey through Bearsville was not easy. It was not comfortable. But it illustrates such a powerful lesson, doesn't it? Having a consistent philosophy and then having the discipline to stick with it through all the noise, that can be an investor's most powerful tool.
And that leaves us with one last question to think about for our own strategies. When the market gets chaotic, are you reacting to the tickers on the screen? Are you a stock picker? Or are you focused on the quality of the businesses you own? Are you a business picker? It's a really crucial distinction. Thanks for watching The Explainer.